Hi, I'm Miley with Asian Media Network, and welcome to episode 6 of the Real Estate and Lifestyle Talk Show, co-produced by Asian Media Network and Elizabeth Melliker, who is the top 2% realtor for My Home Group Realty, and Lele, brand manager from Security National Mortgage. The topic for today's talk show is about mortgage for the first-time home buyer. For many people, buying a home is one of the biggest financial decisions they will ever make. It's a major milestone and it can be exciting but also daunting experience. As a first-time home buyer, you may have many questions about mortgage. What type of loans are available? How do you get approved for a mortgage? What are the pros and the cons of different mortgage options? Or do you make sure you are getting a good deal? In this talk show, we will explore the question and more with the help of Lele, branch manager from Security National Mortgage. Lele will share the insight and tips for you to navigating the mortgage process. Whether you are first starting to think about buying a home or you are already in the midst of the process, this show is for you, and we hope you will find it informative and engaging, and will help you make the best decision for your home buying journey. So sit back, relax, and let's dive into the world of mortgage for first-time home buyer. And here in the studio with me is Lei. Lei is the branch manager at Security National Mortgage. Welcome, Lei, to the show.
Thank you, Mai, for the introduction, and thank you. I'm very glad to be able to join you today and able to share my knowledge and experience in the mortgage industry to all of you.
And Lei, I have known you for, more than 10 years, and you have helped my family with mortgage and refinance, and they love it because flawless, it's fast, and it's efficient, and they get the best rate that they got. So thank you so much. I just want to know, for you, how do you get into this?
Well, I get into it because I need a job. But at the same time, I just bought my home. Well, I helped my parents bought their first home after 4 years in the U.S. But I feel that it's a very rewarding job that we're able to help people or my family to achieve the American dream.
Wow, only 4 years and owning a home and reach to the American dream. That's awesome.
Yes. Yeah, we came here with no money.
I know, but in 4 years and owning a house,
yes,
that's an incredible story. So, Lei, but I know that a lot of people to stay with a job, usually for maybe 5-7 years and then move on to a different job. You've been in the mortgage industry like 20 years or more. What keeps you stay so long?
Well, every time I'm able to help a customer buy their first home or buy their many other homes, their happiness is just exciting, and I just felt like I built a house, or just the rewarding of seeing them happy is make me want to do more for other families.
Well, that's why I always see your post on your Facebook that the big key that welcome home and give it to the home buyer, and they excited that first, especially for the first-time home buyer, right?
Yeah.
So it's like achieving the American dream, and for that's the topic today that we talk about is for mortgage for the first-time buyer, home buyer.
Yes.
There's so many things to cover, but let's go to step by step. Most of people gonna have a question is, what is some of the loan available for first-time home buyer?
Okay, so first-time home buyer, there's a program called FHA, and that's a government-insured loan. So it will help a lot of first-time home buyer buy their home with low down payment. So as little as 3.5% down payment, they can buy the home. And that's what my family was qualified under when they bought their home.
Okay.
Then we also have conventional loans, and that one with first home buyer, they only need 3% down for down payment. So that's another one that is good. The other one is for veterans. So veterans were able to buy their first home with no down payment at all. Then we also have USDA for the rural and farming area. Those are also zero down payment. So those are the loans that they can qualify to buy their first home.
That's awesome. Yeah. But you will mention that to put the low down payment for first-time home buyer. So what the definition of the first-time home buyer? Does that mean someone who never owned a house before? This is their first time ever to buy a house?
No, that's unfortunate. A lot of people didn't know this, but as long as you never owned a home in the last 3 years, then you are the first-time home buyer. So, in 2008, there's a lot of people buy their home and get their home foreclosed. Then now they want to buy a home, is still a first-time home buyer.
I did not know that. Wow. Because people could think with the word first, meaning even though you previously owned a house and you sold that and then you stay on lease or rental property, and then 3 years later you buy, you still consider a first-time home buyer, so you get all the incentive, right?
Yeah.
As a first-time home buyer.
Yeah.
So talk about the incentive. Can you give a little bit incentive for first-time home buyer?
So first-time home buyer is like the one that I told you, mentioned before, is 3.5 for FHA, 3% for conventional loans. There's also down payment assistance program that's available, and one of them was the one we previously talked about, is the 20,000 down payment that will help the government help. Now, right now, there's not much of that. Most of that is they have to pay back, but before it was, after 5 years, it's free. Yeah. So, so now they have a program that you have to pay back after you sell the house, or when you refinance the house, then you have to pay back. But there's still available program.
And there's still a lot of things that help, a lot of incentive to help the first-time home buyer.
Yes.
One of the things is first time you buy the house, and the first thing ever, which is in the last episode we talked about that, is to get the loan pre-qualify.
Yes.
So to get the pre-qualify, why is it important to get pre-qualified in order to buy a house? That's the first thing to do.
Yes, that's the first thing to do. So to buy a home, and you need to get pre-qualified, the lender, you will need to talk to a loan officer, and they will check your credit, because they check your credit to find out how your credit stand is. Because sometimes a lot of people think they have very bad credit. When I checked it, it's really good. Mm-hmm. And sometimes there's people think they have really good credit, and when I checked it, it's not good. So it's good to check it first, and you go through the credit report and see if there's any late that the bank reported error, or there's collection that you paid already but they still showed up. So those are the time when you check it, and so you comb through and clean it out. When you clean your credit report, and then you will able to get your credit score higher, and that will help you pre-qualify for more purchasing power and better interest rate. After that, we also look at your income to see how much you can qualify, because you don't want to go see a house for like $700,000 and you can only qualify for $300,000. Yes. So not wasting a lot of time and get your hope up. So getting pre-qualified will help you understand where you're at and knowing where can you get for the income that you have.
So that's the first step to get the pre-qualified. Mm-hmm. I also confuse the term pre-qualified and pre-approved.
Okay.
What's the difference?
Yes, a lot of people didn't think that that's any different, but it is very big difference. The word pre-qualify is the loan officer like me will qualify to see how much you can purchase based on what we know, right? But to pre-approve, it needs to be submitted to an underwriter, and they are the one that review the file and comb through everything, and then they will be the one that finally put a stamp and say you're approved.
Oh,
So you need
okay.
to get pre-approved. That will be a stronger offer letter also, because the only thing left for the lender to verify is your property.
I see.
Yes.
Yeah. Wow. Now, the process, how long it takes?
So to get pre-qualified, it should be like a day or two, but pre-approved, you need to go through the process and submit to underwriter. That will take like a week or two. Yeah, but the whole loan process is like 30 days, around 30 days. I can do faster, but
Yeah, I know you can do even faster than that. What kind of paperwork will require to get pre-qualified or pre-approved?
So to get pre-qualified or pre-approved, you need to get your IDs and your pay stub if you work for an employer, or 2-year tax return if you are self-employed, and then your 2-month bank statement to verify where your down payment is. So that's the basics document to get, yes.
And earlier you mentioned about credit score. With credit score, good credit score, what consider good and what consider bad?
So credit score range from 350 to 850, right? The bank, we will lend on people with 580 and above, right? 780 consider excellent credit. 720 is good credit, and anything lower than that will be fair or poor credit, right? We can take a look at it, and there's time, I can change, I can help them fix their credit. They either go from, it can go from like a few 20 score to go 100 score. Sometimes I can help them with doing that.
Wow.
Yeah.
Yeah, but to fix the credit score, meaning people can fix it.
Yes.
And if they fix it, the process, how long it takes. Because let's say somebody have an idea that they're gonna buy a house, they've been saving up. Maybe it's also the time to start look at your credit score and fix it if you have any problem, so that 3 months down the road, if you buy it, then you get pre-qualified easier, right?
Yes. So the amount of time to fix it depends on how your credit is, right? It can range from 1 month to a year or 2. So depend on how bad it is, right? So usually if it's like within a few months, I can quickly show them how to fix it. I will let them know. But anything further that needs more dispute or anything like that, I will refer to a credit repair company that I trust, that can do a good job and not charging a lot. Here's the diagram for the credit factors so that you can understand. A lot of percentage of it is based on the online payment, right? On-time payment. So how much you make payment. The second thing is also the number of credit that you are using. Let's say your lender let you borrow $10,000, and depend on how much you use. Let's say you use 9,000, then your credit will drop a lot because they think that you really need the credit and you're in short of money, right? But if you only use 1,000, then they say, okay, this person is knowing how to manage their credit, so your credit score will be better. So these are like kind of reference for you to take a look at to know. A lot of time also increase, right? That will also affect your credit. How many credit you pull. That means you need money. So you keep on checking credit score to see if you get approved for more credit card. So you want to be careful with all of that to keep your credit in a good shape.
Well, that's good to know that. Thank you for sharing with us that credit score factor, because it's helped us understand better, how the credit score company come up with all these numbers, and that's actually impact to us to get loan on anything.
Yes.
So speaking of the credit score, how is that different between, let's say, someone with a 580 credit score versus someone 780? What the benefit? Can you maybe just show it by number or something, or by the percentage of interest that gave us like how important it is?
Yes. So with the higher the credit, it will benefit two things, right? There will credit score affected by interest rate, right? The higher your credit score, the lower your interest. The lower your credit score, the higher your interest gonna be. The credit score also affect on the mortgage insurance, right? If you buy less than 20% down, then your mortgage insurance will be higher if you have a low credit score. So because they have to insure that portion of loss. So that's why it's very important for you to see that checking credit, buying before 3 to 6 months before you buy would be a good idea, because then you can check and see what you need to fix before you buy a home.
Yeah, but thank you, Lei. We understand the importance of that. But we just want to say, for example, between a 580 credit score versus a 780 credit score, does that difference is like 1 point interest difference on average, or how is that?
So credit score, every 20 point will change your interest rate.
Oh, really?
Yes. So they go from like, well, 560, 580 to 620 is around, 640 is around, they kind of clump it together with FHA. But with conventional, like every 20 points, 620 is your minimum. So you go from 620 to 780, right? Every 20 score, it will change you to a different rate. Each rate depends, like 620, you can be like a point higher than a 680.
Wow.
Yeah, so it's very, very rapid. Like 670 and 660, 760 is not changed that much. But if you go a couple more down, it will change a lot more. So especially now the conventional, the FHFA, they just changed all the guidelines, because before they were 740 was the best score, right? So anything above 740 have the same interest rate. But now they break that into 780 is the best score, and 760 have a have a little bit higher interest rate than a 780 now. So
thank you, Lei. I like the fact that you say that we'll be able to fix our credit score. So that's important to know. So for folk out there, you're watching our show and you think about buying a house. First thing you do, look at your credit score, and if it's low, might want to contact the company who can help you fix your credit score, or Lei can help you or refer you to someone who professional can do that job. So Lei, now let's see, let's talk about the closing costs. A lot of people, especially again, first time home buyer, closing costs is a big deal because they need to be able to have enough money in reserve to pay for closing costs.
Yes, a lot of people didn't think that. They only need to come up with a down payment.
Yep.
Yes, the down payment and closing costs. So with the closing costs, you have to kind of know that there's additional expenses, right? You're gonna have home inspection, right? After you found your home, then you have to do an inspection. That's the fee that you have to pay. Aside from that, then you have lender fee. You also have appraisal fee. You also have title insurance, and then also escrow fee. You also have to pay property tax and insurance, and also recording fee. So aside from that, if you buy in a homeowner association community, then they have their fees too. So that's why you have to prepare. And usually it's range from like $6,000 to $7,000 on an average, $400,000 home. So that's just kind of give you a general idea, right? But if you are paying for a point to buy down your interest rate, then you need to prepare more.
Oh wow! See. Yeah. So that's why I say to buy a home or own a home is an American dream. And if you can get your first home, you achieve the American dream.
Yeah.
So what are the payment? What would be the monthly payment, the monthly mortgage look like? Because, okay, so let's say they pay for the closing costs, but then when you move in, you probably don't pay for the first month or 2 months, right? Yeah. And then your mortgage start cutting for what? what, like the month number
Usually-
3 and number 3rd month out?
Yeah, so usually like the bank will round off the month, at closing. So that's why your closing costs also include that. I forgot to say that. So the
Wow.
bank, like depend on like what day you close, the bank will charge the rest of the month on your closing costs. And then after that, the mortgage for the following month will pay on the previous another month. So you have to have accumulated 30 days of mortgage before they make you pay the first mortgage payment. So let's say this is March 20, what's it?
Well, the end of March.
Yeah, so we are at end of March, right? So the bank will calculate the remainder days of the March, and then you will looking at April payment you will make on May 1st.
Oh,
Yeah,
okay. But
so-
at least you know that you pay up front, but you move in, you don't have to worry about the first payment of your mortgage. Now, with your monthly mortgage, what is that cover include?
Okay, so your monthly mortgage payment will include your interest, your principal, right? You pay a high amount of interest first and a very little amount of principal. You also pay property tax. It also can include homeowner insurance. Okay, so it depends. Some people like to include them all into the mortgage. Some people don't want to include it in the mortgage. But if you put less than 20% down, it's required that you have tax, insurance, mortgage insurance, and principal and interest all together in one payment. Okay, your homeowner association payment, that is separate. You pay it by yourself. Yeah.
Wow, so all of that, but the interest rate gonna be, the interest payment gonna be higher than principal for the first year, and then toward the end of your long term, that's when principal gonna be higher, right?
Yeah. Do you know why?
Why? Because they know average people live in the house for like 7 years, right?
Yeah.
So that's why.
No, it's not because of that. It's just because they calculate your interest every month at the end of the month. So they're looking at how much you owe, then they multiply by your interest rate, and that's your interest for that month. So as you pay down on your mortgage, that's why the interest gets less and less, and your principal increase as you go.
What about the income? Because income is one of the important factors in order to get pre-approved for loan for the house. And what is the requirement for the income, like?
Income is you require to have at least 2 years of employment, that you have worked 2 years.
Yeah, but a lot of people nowadays, they change jobs. They could work and receive 1099 from one job, then move to another job and receive W-2. Though with that, how does that impact to the pre-qualification process for mortgage?
So the lender require you to have 2 years of kind of same line of work, right? So if you go from 1099 and you go to a W-2, so as long as it's the same line of work, the W-2 you can qualify after you change job for like about a month, right? Then they can use your W-2 income to qualify. Now if you go from W-2 to 1099, that's a different story.
Why?
So 1099 is considered self-employed, so the lender want to see at least you have 1 full years of self-employment before they consider the income, because they want to see your full years of the ups and downs, all your expenses before they're able to see what you really net your income from. So that's the income that if you change from W-2 to 1099, you need to have at least 1 year of the self-employed income.
But vice versa, the other one.
The other one, you still need 2 years, but you can change to a W-2 income after a year, 1 month, and then we can use the new pay stub to qualify. Yeah, because with that income, there's a base salary, then we can use it. But if you go for a commission, then that's a different story. You still also have to wait for a year to see how much commission you get. before they can calculate your
So
income.
the commission rate is similar like 1099 then?
Yes.
All right, got it. Wow. Well, so it's good to know all this so we can prepare, right?
Yeah.
But nowadays, like a lot of people, they buy a home and they're not even in the same state. They can be from another state that buy a house in Arizona is a vacation home. Or some people from our country, they want to buy a house in Arizona. So would the process any different than people actually here?
Yeah, so the process to buy the home is a little bit different, right? You either, you can trust your realtor to show you the house or that you have to come to Arizona to look for the house. But for mortgage, it's a little bit easier because everything can be done online. You can submit your document on a secure portal or you can send in secure email. Then we can start process paperwork from there. I have a lot of customers buying from Arizona to other state and from other state to buy into to Arizona. So, it's easier. We also can arrange their signing at their current where they live. So,
I mean signing escrow and
yeah. The mobile notary will come to their house to sign paperwork. So it's very easy.
Convenient. Wow. But throughout the process of owning a home, paying mortgage, and dealing with different mortgage company or loan, I also noticed that through the course of your mortgage loan, is sometimes it change different mortgage company. Now, the mortgage company that you originally signed with at the beginning when you first bought your house, versus throughout the time it can switch to different mortgage company. How is that impact to you as the home buyer?
There shouldn't be any changes because when you sign the loan doc for whatever your interest rate is and for your loan amount, that payment will not change. That interest rate cannot change. Okay. The only thing can change is year over year, your property tax increase or your homeowner insurance increase, then your payment will increase or lower if your property tax reduced.
Wow, so thank you, Lei. Today I feel like taking lesson first time home buyer one-on-one with you. So we can have everything that we need to know in order to buy a home. Is there anything else that we haven't covered that you want to mention to our audience?
There's a lot to cover and to go into detail. So maybe we save that for the next episode.
Or people can call you, Lei, because through the number on the screen, you can call directly to Lei office. Lei, I know that you speak several languages and dialect in Chinese. So what languages you and your staff at the office can
we can speak Vietnamese, Mandarin, Cantonese, and of course English.
Wow. Cantonese and Mandarin.
Yes.
Yeah, because that basically like you cover all the Chinese people, they speak Cantonese and Mandarin.
Yes.
Yes. So thank you so much, Lei, for the informative conversation today that help our viewer out there, especially for those who are first-time home buyer. And as you know, when you buy a new house or a new home, that's like achieving the American dream. So there's so much thing to talk about or to cover, but we hope that our talk show will be able to give you some insight information and Lei be able to share her experience and her knowledge in the mortgage industry that she have been working in the last 20 years. So once again, thank you so much for watching. We hope that you find it helpful, and don't forget to like and subscribe to our channel so you won't miss any new video upload. And Lei, you want to say something?
Thank you very much, and thank you for watching this episode. And if you have a question, please give us a call or at this phone number on the screen.
And we are looking forward to welcoming you home.